Hi, good afternoon everybody and welcome to Derbyshire Community Bank first virtual AGM. My name is Jackie Littlewood. I work for ABCUL, which is the Association of British Credit Unions, and we're hosting the AGM today on the system. So just going to run through some housekeeping. Over to you, Mick.
Okay, thank you. Hello everybody. I don't know how many of you there are on my screen, and in the top right it says 19, so I assume there are 19 of us altogether, which is actually an improvement on where we've been in some previous years. What I will do is I'll go through the report as I normally do, but first we have the minutes of the AGM which was held last year. Last year's AGM was it wasn't in this format, and it wasn't in the traditional format either. We did the whole thing remotely through email, I think. But basically, the first thing to do is to approve the minutes of last year's AGM as a true record. If you'd like to do that, please. Is that a vote, Jackie?
Yes, it is. So again, same as the weather question, do you accept the minutes of last AGM are a true record? Yes, no, or abstain if you didn't attend to the last year's meeting. We've got 80% of the members have voted. We've just gone over the minute mark. We've got 80% of members voted, 33% yes, 67% abstain, I didn't attend. Are you happy for me to close the vote? Are you happy for the vote to be closed at 80% of members voting?
Yeah.
And back to Pat.
Lovely.
Okay. Right. Okay, that's the agenda. Right. Okay, here we go. So I'm not really quite sure what you're all looking at. Presumably, you've just got the PowerPoint presentation that we'll go through as part of this session. I'll begin the report, as I have done every year, by saying that although we are covering the year October to 2019 to September 2020, there are some issues that actually relate to the future, and there are some areas where, to give a proper indication of where we are, to discuss things fully, I need to touch on things that are happening now or will be happening in the near future. So moving on to the year in brief, it was a year like no other in the history of the credit union due to the pandemic. And the pandemic impacted on us in three ways. First of all, there was an immediate reduction in borrowing, a sudden discontinuous fall in borrowing. And that occurred in March, and it was with us right through until September. The second impact was that from April, staff were largely working away from home, and that had implications, obviously, for the management of the office and the management of the business generally. And the third element was the significant financial support that we received, first of all, to support our furloughed staff, and then secondly, via the business support grant from Derby City Council, which was funded nationally, which provided us with some useful cushioning. Without that support, then we would have had problems, and we may well have been into redundancies of staff. So it was an interesting year from that perspective. If I can move on to the next slide. This deals with lending, the year's loan allocation numbers. And this is a slide that's familiar to members of the board, not so familiar to others. But basically, we've got two columns. The first column shows the lending figures for 2018-19, and they're in red or green. And where they're in green, month by month, those months record a level of lending which exceeds that of the previous year, which was 2017-18. Where the figures are in red, that indicates that lending in that month was below the corresponding month for the previous year. Now, as you can see there, for 2018-19 was a really good year for us. All of those green months, and that bodes well. That impacted very significantly and very favourably on our income for the year. If we move on to 1920, though, which is the year that we're considering, you'll see that once we get beyond February, then we've got a whole lot of red, and lending there significantly. Once the lockdown kicked in, lending significantly below the previous year. So from March right the way through to August and to September, we have red months. The overall impact is that over that 6-month period, total lending was just over £200,000 lower than in the previous year. Now, obviously, as an organisation, we survive in terms of our lending, and that's going to be with us for some time. It has impacted on our income for this year, as you will see, but it will continue to impact for the year after and maybe beyond that. We were doing quite well due to the previous year. By April of 2020, our loan income was about £17,000 above target for the year. So we were looking at a very, very healthy outturn. But the reduction in lending following the lockdown meant that by September, our loan income was only £5,000 above target. That is a loss of £12,000 in income over that period. And that continues on into the future. In terms of our staffing, the implications there were that staff were working from home. It wasn't normal. We had Sarah trapped in France, which is where she now lives, our chief exec, and we had the interesting experience of a new operations manager, Shamila, who joined us just as everything was closing down. So she had the unenviable experience of having to manage staff who were largely not in the office, staff that she had to familiarise herself with. So that was very significant for us. In terms of our financing, the furlough compensation amounted to around £5,000 for the period up to July 2020, and then together with the £25,000 grant from Derby City Council, that compensated for our loss of income. The second period of lockdown, just to bring us up to date, hasn't seen the level of collapse that we saw in the first wave, and that level of collapse incidentally wasn't restricted to ourselves. All credit unions experienced that significant fall off in lending in the first lockdown. But we're still, as I speak to you now, in March 2021, struggling to match the lending levels of 2 years earlier, and our loan income remains about £9,000 below the projected figure and has already been revised downwards. So that is an impact on our financial position that will remain with us. Moving on to membership. Can you put the next slide up, Pat? Given the curious nature of the year, it's difficult to sort of work out any significant membership trends, apart from the fact that it's clear that in our traditional area, bearing in mind we began in Ilkeston and we were located in Ilkeston for many years with branches across Amber Valley and Erewash, that we've seen a decline in membership, roughly consistent with the decline we saw the year before in those traditional Ilkeston, Amber Valley, Erewash areas. And against that, an increase in Derby following our relocation to the city of Derby 4 years ago, and then a very significant increase, 196 new members recruited as a result of the Money Spider merger in South Derbyshire. So the overall impact on the year in terms of membership was 4.4% increase compared with the 1.5% reduction in the previous year. But without the Money Spider impact, we would have been looking at a reduction of about 1.8% in our membership, which I think that given the context, the context of the pandemic, isn't too worrying. We weren't able throughout the summer to do any promotional activities. We weren't able to get out and about as we often do. We weren't able to meet with partners and develop strategies. So all in all, I'm not too concerned about that. Our membership has held up, and I think that's okay for the time being. Also, in previous reports, I noted the switch from over-the-counter to online transactions, and this continued throughout the year. We've got 3,200 adult members at the moment, and of those, 2,700 are entirely online account holders. Now, give you an indication of the way in which that's grown. Online loan applications, there are a total of 41 of those in the 2017-18 year. For the current year, 2020-21, we're looking at 2,550, and the year still has 6 months to run. So it's a massive increase in online as opposed to over-the-counter transactions. We've closed during the year our branch in Ilkeston, which was doing very, very little business. And I want to flag up at this meeting the fact that we may have to undertake a serious reassessment of our need for high street premises going forward. It's not just the pandemic and the move to working from home that's impacted on here. It's also the general move away from cash, away from over the counter, to online electronic transfers of funds. And we are at the moment undertaking an assessment of our current premises in Colne Market. These currently cost us about 50,000 a year. That's 30,000 in lease plus about 20k in utilities, rates and insurance and so on. And that lease has a break clause in it, which we have to activate if we wish to activate it in June of this year, because in December we'll have had 5 years of our 10-year rental period, and we will be looking at that in some great detail. We may well look to move to other premises or to new ways of working. Moving on then from membership to shareholding. As you can see from this table, our shareholding reduced significantly in 2018-19, and that was because we took the decision to reduce our ISA interest rate to what is everywhere universally a very low level, and keep the fund closed to new applications. But I did note in last year's report that from 1st of October 2020 we anticipated an increase in shareholding, and as you can see that's happened in part due to the money spider merger. Moving on to lending, and the next slide. The value of lending, it won't surprise you to learn, the value of lending has declined significantly, and it's now for 2019-20 at its lowest level for 8 years. So that was the impact of the pandemic, a sudden downward fall in lending. The number of loans only declined marginally, as you can see from the second slide. We did make a decision in 2018-19 to move away from large to smaller loans. So although the value of loans declined massively, the number of loans didn't, mostly because most of those loans were of a lower value. Moving on to the next slide, Pat. It's looking at the average loan size is shown in more detail, down from 543 to 486. Moving on to loan income, which is the next slide. It's interesting to note that although our total lending in 2019-20 was 155,000 below that of the previous year, our loan income was £44,000 higher. And that's because the income, as I said earlier, from 1 year doesn't relate to lending in that year, but to the profile of lending over the previous 2 or 3 years. And the income the loan income in 1920 was largely a result of the lending in 2018-19. And that's one of the reasons why we need to be cautious in our projections going forward. In preparing our budget for 2021 and beyond, we've had to factor in a significant anticipated fall off in loan income, even though it's pleasing to see that lending in the current period is looking reasonably healthy. Moving on to the next slide, Pat, our financial strategy and performance. And this illustrates very graphically what a good year it was in terms of our outturn. We were forecasting a surplus for last year. The surplus actually was significantly higher, 69,560. If we subtract from that the 25k business support and the 5,000 furlough support, then our surplus falls to about 40,000. And if we subtract the 30,000 or so that were in money spider balances, then our which was a one-off injection to our funds, then our actual trading surplus was around £10,000 for the year, which is much more modest, but is actually very good compared to what's happened in previous years. If we add back the kind of loss of income that we experienced as a result of the pandemic, I reckon that we would probably have had an actual trading surplus for the year of 20,000. But however you look at it, the year was a successful one in financial terms. We are starting the new year with a significantly reduced loan income. It's impossible to quantify the effect. Now, I know I keep coming back to this, but it is impossible for us to quantify with certainty the impact of the reduced loan income going forward. And that's why the board, with a great deal of reluctance, is recommending that we are not in a position to announce a dividend for the year, and we'll come on to present that for a vote later on in the meeting. Looking at our auditors' reserves, they remain strong at around £312,000. They've received a boost because of the £69,000 outturn. And our hope is that our improved trading position following the end of lockdown is going to see us not having to withdraw from reserves at all this year. And if we succeed in that, then that will be really impressive. Moving on to the next slide, bad debt written off. This is a familiar picture. The amount of bad debt write-offs hasn't increased significantly. There are severe problems that all community-based credit unions experience over bad debt. It's been with us now for a few years. We do have a number of strategies that I've dealt with in previous reports for dealing with this, but we're not complacent, and we do continue to target it. Moving on to the final slide in my report, and these are what's known as the CREDS ratios, the Credit Union Source Book, and these are the ratios that we examine as we go through the year. They're the ratios that the key financial ratios that the Prudential Regulation Authority, that's the PRA, and the Financial Conduct Authority are interested in. They're introduced in 2016. The table shows that we're actually well inside all of the key ratios. The one area where the position in September 2020 was perhaps not quite as good as we'd like to see is net loans as a percentage of total assets. They're 59%. I think that's now standing at around 64%, but it still compares quite well to a peer average. Finally, we do depend on our partnerships, and Derbyshire County Council, Derby Homes, Derbyshire Dales District Council, Amber Valley Borough Council and Derby City Council remain important partners to them, and we're very grateful for the assistance and support they provide for us throughout the year. The credit union movement generally does continue to struggle, particularly community credit unions, but the relentless competition from payday lenders is not as strong as it was following changes that have been made to the regulations concerning those lenders in recent years. The final thing I'd like to say is to convey my appreciation of the professional and dedicated approach taken by our Chief Exec and her team under extremely trying circumstances this year in continuing to develop and modernise the operations of the credit union. And also my sincere gratitude to my colleagues on the board of directors and of course to our members, without whom none of this would exist for the local community. And I ought to add before I finish that this is Sarah's last AGM as our CEO. She's finally bowed to the inevitable, trying to run the credit union from somewhere in the middle of darkest France is a difficult job. So she will be, I regret to say, leaving us in June. She will be missed, but we're very grateful for her efforts, for her application, and for her professionalism that she's shown over the years. So you have our thanks, Sarah. And I have to say, we only appointed last week a new chief exec. So you'll be seeing a new face next year. So that's the end of my report. And I guess we'll deal at this point with any questions that might have come in.
There was just a couple of questions, Nick, which, if you give me a second, I will open up. I have responded to them. One was basically about, do you think we're losing out on potential customers due to activity being more online? Not all potential users will have access to computers. And I have responded and said that it does affect a small minority of our members, but we do try to assist those via email or on the telephone, because we do still get people who request withdrawals and assistance via the telephone. So we're not entirely online. Some of our business is still on the telephone. We get very few people into the branch in Derby. We probably average one a day. At the moment, obviously nobody because of COVID, but when we are open, it's still only on average one at most, or two a day. And the other question was, well, really it was more of a statement to say that they're happy for us to give up the high street, but we need to think about how best we can reach out to those who might need us most. And basically in response to that, I've said that it is something the board will take into consideration when they make their decision. There are a number of options that the board are looking at, but the cost of core market is considerable. And despite our visibility, we still don't get many people walking through the door. So those were the only two questions so far.
I can just add to that for members that the board does commission some pretty extensive surveys of footfall, both in Ilkeston before we closed the branch that we had there, and of course in Cornmarket in the main branch in Derby. In Ilkeston, the numbers attending the Bath Street branch had fallen to miserably low levels. It certainly made no sense at all for us to keep that open, particularly since our landlords were looking for an increase in rent. And in terms of Cornmarket, yes, everywhere will have seen a significant decline in footfall. That's true as part of the pandemic. But the way things were developing prior to that, we can't be optimistic that we're going to get an increase in numbers of people walking off the street that are going to compete anything like the numbers that we managed to recruit online. So the decisions that we've made there have not been taken lightly and not without a fair amount of research. Moving on then, Supervisory Committee report, Sarah?
Yes, okay, just one moment. So yeah, at the moment, we don't actually have a supervisory committee. It's something that we're obviously trying to recruit to. But in the meantime, we have had a part-time compliance officer, but unfortunately, she has resigned and actually left the credit union this month. So from this point forward, it's a key priority for credit union to try and fill the supervisory role, and there will be a poll at the very end to see if anybody is interested in the role. But basically, the supervisory committee are our sort of internal audit, and they report to the board each month and are basically making sure that we as a credit union are following the rules and regulations that are set for credit unions and our own policies and procedures. And listed on this slide are just some of the things that they review as part of that audit. If we move to the next slide, Pat. And one of the things that the supervisory committee at the AGM is just to really confirm to its members that it has no major concerns regards the operation of the credit union in terms of those regulations and our own rules, and that we are complying with a single customer review requirements, which is basically if we were to fail as a credit union, we're able to meet certain standards in terms of providing information to the regulators so that they're able to pay out to members in a very timely fashion, and then also that we have adequate insurance, and that any additional activities that we carry out are done so within the rules. And actually, in terms of additional activities, the only ones that we actually have is with regards to transactional accounts, budget accounts, where we actually pay bills for some of our members, and we currently have about 7 of those, and they are compliant with the rules. So that's it in terms of our supervisory committee report. And like I say, at the very end of the presentations, there is a poll, and it will be asking if anybody is interested in becoming a supervisory committee member or a board member, or if you're just interested in finding out a bit more about them before you make any sort of commitment. So if you can let us know at the end. And moving over to you, Pat.
Okay, thanks,
Okay,
Sarah.
Treasurer's report.
Lovely. Right, so as Mick said, it's been a difficult year, but despite that, due to COVID-19 and because of the massive drop in lending, we still made a profit of 69,560, which was good. The income exceeded expenditure by 118.5%, and this was mainly due to additional income from grants. Continuity grant of £25,000 and the saving from the furlough of 2 staff. We also had extra monies surplus monies from Money Spider following the merger, and the amount was 29,873. Thank you. Next slide, please. So looking at the balance sheet at the 30th of September, our total assets have increased by 15%. The shares have gone up. Total loans to members are very slightly down by 2%. Interest gained on loans is up by 14%. Our surplus before tax is a plus 295%. So 2019 it was minus 236, and then in 2020 it was plus 69,560. And we've increased the general reserves by 28.5%. So a new business plan for 2020 to 2023 was approved by the board. With regards to compliance, we remain in a strong position, maintaining in line with regulation a general reserve equal to or greater than 10% of total assets. In addition, our capital to asset ratio requirement of 5% is exceeded as we're over 15%. The dividend, whilst we made a profit in 2019-20, this was only due to grants and the merger. And in view of the difficulties we face with the impact of COVID-19 on lending, we're not recommending a dividend at this time, unfortunately.
Okay, thank you, Pat. Moving on then, the audited accounts to September 2020. I believe there are a copy of the audited accounts within the papers. And I think at that point we move on to a vote or 2 votes. So Jackie, where are you? Are you dealing with the votes?
I am, yes. I'll just launch the poll. So do we accept the audited accounts for 2019-2020? Again, if you can just click in the relevant buttons. We're up to 69% so far. Let's take it up to a minute. You can put your vote in there, please. So still at 69% of members that have voted, but it is a unanimous vote. You can put your vote in there, please. Got 69% of the members that have voted. Are you happy to close at that number? To the unanimous, yes?
Yeah.
And the dividend vote as well. Again, if you can put your votes in there, please. Up to 75% of members voted and it is a unanimous yes. .81% of members have voted now and it's a unanimous yes. Happy for the vote to close?
Yep.
Pat, can you just move the screens on? I think it the next, just go back one.
Yes. We have a final. We have a. That's the one. We have a final vote. I have to say that since we appointed Alexander Sloan as our auditors about 3 years ago, was it, Sarah? I've been extremely happy with the work that they carried out. It's been, you know, we've had a number of firms in the past, but these I've been very, very pleased with these. So I'm more than happy to recommend the reappointment of Alexander Sloan as our auditors.
We've got 75% of members voted and again it's a unanimous yes.
Yep. Okay.
And the final slide, Nick, for election of directors.
Yes, during the year, we saw the standing down the resignation of Bev Crichton, who was from the University of Derby, and Jonathan Smale from Derby City Council. We did co-op during the year, Malcolm Wright and Keith from Money Spider. Unfortunately, Keith's had to stand down since then. and Gordon Thomas from Long Eaton, and Leah Taylor from Ilkeston. And we require a resolution to re-elect, to approve those as directors and to re-elect all remaining directors.
And that's two polls, isn't it? So do we accept the board's recommendation to elect the co-opted directors to board of directors en bloc? So we're in at 69% and it's a unanimous yes.
Yep.
And the final poll to accept the board's recommendation to re-elect the remaining directors to the board en bloc. That's gone straight in at 81% members voted, and it's a unanimous yes. That's 81% of members that have voted, and it is a unanimous yes.
Good.
And then there's the final poll to see if anybody's interested in coming onto the board, board advisory. Could run that one.
Yeah. We've got some interest in there being a board member and some interest in supervisory committee. So once the reports have come across there, then you'll have those contact details.
Brilliant.
I'll just leave that one open just up for the minute. And if anybody decides after the AGM, you can contact the staff direct. You need some time to think about the roles.
Yeah, there's no pressure. If anybody wants to have a conversation first, then by all means get in touch and we can have a chat about it, or Nick or another member of the board would be happy to talk about it.
So 63% of people have answered, so just close that.
Yeah.
And then we can share the results. Yeah.
Yeah. So is that it, Mick? Any final thoughts?
No, I'm grateful for everyone's attendance on what's been an interesting experience as far as I'm concerned. At any rate, it's new and novel, I have to say, and I'm not being negative in this, but I hope we don't have to do it like this again. But it has worked reasonably well. And just finally, I think it's thanks to those people for attending and for participating. and a final thank you to Sarah, for whom she will regret forever the fact that she's going to have to miss these meetings in the future. So with that, I declare this meeting closed. Thank you.
Absolutely.
Thank you.
Thank you.
Thank you.
Thank you, everybody.
Thanks.
Thank you. Do you want a recap after your members have left? Just have a quick recap. So to leave the meeting, to leave the AGM, if you click on your control panel at the top, so it's file and then leave webinar. If you click on the top right hand corner, file and then leave webinar.